Welcome to another video analysis brought to you by tradingpricepatterns.com. We want to wish everyone happy holidays, and in light of the upcoming holiday week in the market, we want to take a look back over the past week of what we've been highlighting on the tradingpricepatterns.com blog, and maybe talk a little bit about what to expect going forward into the last trading week of the year. Of course, on everyone's mind is the continuing fallout of the housing market and how that relates, of course, to the subprime mortgage market. At the center of this heated debate is Citigroup, the biggest and most important banking stock there is. Everyone and their brother is short Citigroup and the bank stocks in general. Everyone is extremely pessimistic and bearish on these stocks, yet they're tracing some very interesting bullish reversal patterns. This Citigroup pattern in particular is a head and shoulders bottom. It's a bullish reversal pattern. The stock is holding up pretty well in the face of some nasty news. So the sentiment is very negative. The news is as bad as it's ever been, but the stock is refusing to go lower and is in fact showing this bullish reversal pattern. Kind of interesting. It's one definitely to watch going into next week, and especially as we turn the calendar into 2008, so going beyond next week. Now, on the opposite end of the spectrum is Goldman Sachs. It's showing just the exact opposite. It's showing a head and shoulders top, which is a bearish reversal pattern. Now, Goldman did hold an incredibly important level, $200 last week. The stock did break down from a triangle a couple weeks back, went and tested that 200 level last week, but it held firm and has since bounced back up by about $5 or $6. So that has, I think, some willing to step in here, buy some Goldman Sachs, buy some financial stocks in general, and take a bet that maybe at the end of the year and going into next year, some of these stocks might rebound a little bit, but we need to emphasize this is very, very short term. So if you're going to take a bullish trade here in something like Citigroup, do so with a very short time horizon, be quick to take a profit. Now, midweek we started talking more about gold and the US dollar. Now the two go hand in hand. Essentially, as gold prices go higher, the US dollar is generally getting weaker, but if that dollar starts to strengthen, you can bet gold prices will pull back at least over the short term. Now, head and shoulders patterns are popping up all over the place, and the Forex market is no exception. We're seeing a head and shoulders top in the euro US dollar. Now, if you've got to follow one pair in the Forex market, this euro US dollar is it. Now, you don't necessarily have to go into the spot Forex market to trade these exchange rates. You can go right to exchange traded funds. They're known as these currency shares. The euro is the FXE. It's an ETF that we talked quite a bit about. We highlighted Wednesday this head and shoulders top, which was broken. We've got a bearish price objective now all the way down to 141. So what does that mean for gold? Well, we had a very interesting and timely highlight, I might add, to gold Thursday, late in the week. We saw that triangle forming, yet another bullish continuation pattern unfolding in gold prices, and sure enough, the stock popped, GLD that is, which is backed by physical gold. Again, a nice way to trade gold without necessarily going into the futures market. Here you can just trade the ETF, GLD, like you would any other stock, and participate in the strength in gold prices. Yet, as the US dollar is strengthening, like we saw in the FXE or the Euro US dollar, gold prices are doing the same thing. Kind of an interesting conundrum here. It usually doesn't happen, and we expect to see some resolution to this divergence, but in the meantime, still staying very bullish on gold, as we could see that continue higher. We've seen just yet one bullish continuation pattern after another in gold. It's been a pretty easy trade over the last couple of months. Finally, we capped off the week by getting a pretty early Christmas present, in fact. That was courtesy of First Solar. We highlighted this red hot solar stock, ticker symbol is FSLR right here. The stock was shaping up with the bullish wedge, and we saw this very early Friday morning. We put up the alert. The stock was up by about $5 or $6 by the time we put up the alert, which was about 10:20 Eastern. And we saw the stock and was bouncing around between 252 and about 255. And 255 was the resistance level of this bullish wedge, above which the stock broke about 20 or 30 minutes after we posted it, and look where it ended up on the day. All the way up at 266, huge breakout, very early present, which we enjoyed very much. Hope you did too. So we'll end on that note today, and we will be back on Wednesday after the holiday. And looking forward into next week, typically a bullish week. Market's quiet with most participants away for the holiday. That means we can expect maybe a quiet, relatively smaller upward bias to the market, meaning we'll be looking for some good bullish continuation patterns in some of the year's strongest stocks like Apple or RIM or First Solar, to name just a few. So we'll see you then.